I can't talk about that.
Oh,
Not
Lord.
because we just went live on Facebook.
Okay.
Yeah.
Have you been affected by the Harvey flooding? Does your silver brass bronze
It's not that I
or
can't
enameled
tell you,
be
but I
restored? Colonial Brass repairs, restores, and refinishes brass, bronze,
I can't
copper,
tell all
silver,
the
and nickel.
world of
Colonial
Facebook.
Brass offers polishing, restoration, and
The
repairs
world
for all
of
metals.
faces.
Let them know that you were affected by the flooding, and they'll give you a Harvey discount. They also repair bronze statues and figurines. If it sat underwater, Colonial Brass can bring it back from the trash. Don't throw it, restore it. ColonialBrass.net. Or call 713-784-7765.
Oh, man.
Colonial Brass.
Walgreens has good news for anyone managing diabetes. We've got your back. That's right. Walgreens pharmacists are here to consult with you in person and answer any questions you may have about new and existing medications.
There we
You
are.
can get free advice from our trusted
cool.
experts day and night at walgreens.com or the mobile app. Walgreens has all major brands of diabetes testing supplies like Accucheck and Walgreens TrueMetrics. That's not just good news, it's great news. Stop by and talk to your Walgreens pharmacist today. Walgreens, trusted since 1901.
That's funny.
My mom's a breast cancer survivor. The United Breast Cancer Foundation saved her life. Their free breast cancer exam caught the cancer early, and it saved her life. But now the foundation needs your help so they can continue offering free or low-cost breast screening exams, saving more women's lives. Help them by donating your car, whether it's running or not. They'll provide fast, free 24-hour pickup, and you receive a charitable tax deduction, plus the great feeling you'll get knowing your donated car is going to help save more lives.
This is yours
Just
or
call
Red Path?
800-478-6860
Yours. Both.
to set the wheels in
Right now I'm
motion.
logged into
They take
mine.
cars,
But
trucks, vans, and SUVs,
I should pop
running
up
or not. Call
on my own feed pretty soon.
800-478-6860.
Man,
United Breast
there we
Cancer
go.
Foundation needs your help, and your donation could literally save women's lives, helping them catch breast cancer early, like they did with my mom. Donate today. 800-478-6860. That's 800-478-6860.
The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the
That's
staff,
not good.
management, or ownership of this station.
Oh, it's
It's
frozen.
time to
My-
get on
yeah,
the right
it is.
path with Right Path Real
think it's my
Estate
computer.
Radio with Tom Perry. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
This is the new one, right?
Do what?
This is the new one, right?
It's more than a year old, but yeah,
Yeah,
I like it a lot.
I like it.
Behind you is on the air
Like this
now.
part.
Taking calls at 713
You know, it detaches too, right?
Oh, no, I didn't know that.
Toll free
Oh, cool.
877-881-0271. Now here's your host, Tom Perry.
Hot mics.
Hey, welcome to the show, Right Path Real Estate Radio. Today is Build Your Team Tuesday, and we're going to be joined live in the studio with Paul Trin. He's with Legacy Mutual Mortgage. He's part of the Jennifer Hernandez team. Paul, welcome to the show.
Thank you. Thank you very much. Good morning.
Good morning. So you've been with Jennifer for a pretty good while. You've worked on different sides of the house, so to speak.
I have.
What's going on in the world of retail lending?
A lot. We're staying busy. We're constantly staying busy. There's just a referral network that we have in place that's, always has us just hands full all the time, and we're just knocking them out as we go. So
And part of that referral network, what you're talking about is y'all work a lot with agents, right?
Yes.
Because y'all host a lot of continuing education. Y'all host a lot of things going on with agents around the city. So you have a good feel for what's going on in the retail market. We use you every time that we list a property on a retail basis as we're flipping a house. One of the things that we know is that when we were using all different types of retail mortgage companies, you got inconsistent results.
Right.
And, one thing in terms of building and scaling a business is inconsistency will kill you over time. And so you've got to have consistent, predictable results. And one of the things we found with y'all is y'all have a system and a process in place. You never miss, you never get down to a couple of days before closing and say, oh, we forgot to order the survey, or we forgot to order the appraisal. Or,
That's right.
of course, the mortgage companies never say they forgot, right? Just like title companies never say they forgot. They always blame it on something else,
Right. That's exactly what it is. We there has to be processes in place for us to be as efficient as we are.
Right.
And that comes with experience too. The team itself is comprised of almost a combined close to 30 years of experience on our team that have come together to tweak and fine detail those products fine detail those processes to make it as seamless as possible.
Absolutely.
Mm-hmm.
So So tell me a little bit about what's the best way for an investor if they wanted to work with you because they're flipping in a house. How can they smooth out that process? I mean, describe a little bit. I could tell you how we use you, but you could probably tell better how a new investor should get started with you guys.
Sure, absolutely. We love working with the investor community. It's a matter of just understanding what's going on, where you're at in the process. When you are coming close to that flipping, you're getting close to the retail part of putting it on the market and starting to meet buyers, come to your doorstep and wanting to buy or put in offers. That's where we really shine. We help screen those buyers that come to your door. We help basically allow you to understand what is a good buyer and what is a bad buyer. And I don't mean saying a bad buyer, but I mean one that is truly pre-approved and not someone that's just loosely pre-qualified.
Yeah, one of the things that I love is that there's so many mortgage companies out there that allow you to get a quick pre-approval letter, right? And so they'll basically say, well, how much money do you make? And then if you say, well, I make $500,000 a year, they go, okay, and they write that down. and then they go, well, how long you been on your job? Well, I've been in my company for 30 years. Well, that's kind of strange because you're 35 years old, but okay, we'll believe it. And so they just allow you to state whatever it is that you want, and then they send this pre-approval letter that says, assuming that all these things are true, then you're approved at this dollar amount, right? But that's not worth the paper it's printed on because nothing's been verified. There's no real due diligence. Y'all can do a quick, y'all call it red light, green light.
Red light, green light.
Yeah, and I like that a lot. So we can, what we typically do, just to let listeners listen, to know how we work with Legacy, is that we get an offer that comes in and we say, hey, thanks a lot for the offer. We've got a property list on MLS. Our agent says, hey, thanks for the offer. And your pre-approved letter is not a pre-approval letter that we accept. And so we require that everyone gets pre-approved with Legacy. That way we know that we have a real pre-approval. And then that allows y'all to interact with the potential buyer and kind of pre-screen them. And through that relationship, y'all earn that business, a tremendous amount of time.
Sure. Yeah, we get to earn that business. If everything lines up, everyone's happy, we earn that business too. That's correct. And those processes, like we talked about processes earlier, that's when those processes really kick in with our pre-approval. We don't, like I said, there's no taking your word for it. I'll loosely pre-qual you and you go out there and waste everyone's time. We do all the work up front as much as we can. We talk to the person, get to know them, and allow ourselves to better understand them. And sometimes we don't need all the documents that you would think we do. There's definitely a standard package, but sometimes people get around that. There's ways of getting around that too, and everyone's different. So it might that pre-approval might come a lot sooner than later. And usually, if everything lines up perfect, 1 to 2 hours on a pre-approval, and we'll let you know right away. And then it's downhill from there because we've already done all the verifying and all the confirming of everything that they're stating up front. So there's no going back and forth, and we make it easy for everybody.
Yeah, that's fantastic. Well, and what I can tell the listeners is that since we've been using y'all, it's smoothed out our process.
Awesome.
That I can't remember the last time that a buyer has fallen out in the last, because here's what happens. You take a property off the market, and you set up for like a 30-day close, and we normally budget 60 days, but every day that we can close sooner than that is extra profit in our pocket because we have holding costs typically average between 1% and 1.5% of the after repair value of the property. So we're flipping a $400,000 house. That means our holding costs are somewhere between $4,000 and $6,000 a month.
Exactly. Wow.
So at $6,000 a month, that's like $200 a day. So an extra 10 days cut off the holding time. That's $2,000 of profit in our pocket.
Oh, for sure.
And so most people don't realize that every day you're holding it, that's costing you money. And so if you're dealing with one of the big national brands, there's a bunch of them out there. You're dealing with some kind of underwriter that's out or a processor, a closer that's out in Minnesota or something like that, and they're on a toll-free number and you never can get a hold of. It's like that. It becomes a real nightmare when it's like, hey, is this going to happen? What are we waiting on? What can we do? You start pushing that process forward because closing. That's how everybody gets paid, right?
Yes, absolutely. I agree. All our team is all in house. we're local. This is all we do, as opposed to a financial institution, a bank, a credit union. They got so many other things going on. There's other products going on, or the bigger banks. They have that. They have such a large presence with their marketing that there's a lot of foot traffic that comes in. And
Right.
we only do one thing, and that's mortgage loans, and that's
Right.
what we specialize in, and that's what we do day in and day out. And because of that, we've become pros at it, and there's nothing else that we focus on but that. There's no other products that we need to worry about, like checking and savings
Yeah,
accounts.
you aren't
Right.
doubling up on doing checking and savings accounts.
Right.
And, hey, how much are your CD rates and
Exactly.
So what are mortgage rates doing right now? What are you seeing?
Unfortunately, with the with the economy as it is, they're creeping up.
Yeah.
How
much have they changed in the last?
They're hovering right around, on a 30-year fix, typical, standard stuff, maybe 4.5 to 4.75. They're touching 5 in some instances. So, everyone's different though. It really depends on the loan amount, the credit score and things of that nature. But all in all, everything's kind of, ticked up a bit. So
6 months ago, where we just as a comparison basis, where were we 6 months ago?
4.25.
Okay.
Not even maybe 4.5. So about a half point higher.
Yeah.
All across the board.
Okay.
If anything.
And what do you think it's going to do between now and the end of the year?
I think it's going to stay right here. I don't anticipate it going any higher. I think we're kind of in new territory now too. So, but for the rest of the year, I don't think that interest rates are gonna rise that much higher. But I think it's gonna be right here. So this is pretty much gonna be, I believe, the norm with the way things are trending right now.
Okay.
Yeah.
So I want to give out y'all's contact information. It's jennifer.legacymutual.com. That's jennifer.legacymutual.com, 713-579-3600. Part of the Hernandez team, and this is Paul Tren, and it's jennifer.legacymutual.com, 713-579-3600. So what's the way that somebody would start the process? If I'm an investor, do I want to set up a lunch? Do I want to set up a breakfast? Do I want to just come over at 10 o'clock in the morning, just drop in? Do I need an appointment?
Yeah, we would love to meet you. Face-to-face consultations are some of the, one of the best things that our clients love about us is we want to meet anyone and everyone that we possibly can do business with. So if you're coming on the sell side as an investor, we would definitely want to sit down, introduce the team to you, kind of show you what processes we go through when we look at those buyers, better understand what type of properties you have, all the stuff that comes with that, and allow you to really tune into what it is that we do and we look at. So when you're out there and you have those properties on, and you know exactly what we're doing back at the office to help you out. And the same for the clients. We always stress right away that we want to set up a face-to-face with them to capture, that moment to really meet with them, sit down with them, and kind of, especially if they're first-time home buyers, kind of hold their hand, walk them through it, and introduce the team, and that makes them always feel better about the process versus just doing everything on the phone or the internet, and you don't really get to know the person, and that's really one of the things we really like to do, and also meeting them in person helps. Bring on a lot of questions that they never thought about, and seeing the numbers and visually seeing things and interacting with it really helps paint a better perspective for them.
Okay, so every time that y'all are on, I always have to ask about flooded houses.
Right.
Have you seen a flooded house that's been remodeled by an investor and then sold retail? I mean, I know y'all have a huge network of agents, things like that. So have y'all financed a flooded house yet?
We have. I mean, they're out there, and it's inevitable. You're going to run into one, and with us talking to so many investors, you can't get away from it. So we've definitely talked to many investors that have found it, renovated it, and put it on MLS or put it on HAR, and are ready to sell. So
have y'all actually had one that the retail buyers come along and wanted to buy that?
Yes, absolutely.
Okay. And in terms of values, are you seeing is there a penalty for the flood happening? Is it going for the same rate as pre-flood? Is it
No, I think so with all our products, we're Fannie and Freddie we're backed. So any property that we would represent a loan on would have to be turnkey ready. So with that being said, or retail ready, I guess you could say. Move in, it's habitable,
right?
And once you clear that, and there's.
So you haven't found anything changing on the appraisals or anything like that? Okay.
No.
So I've been joined live in the studio with Paul Trin. He's with JenniferLegacyMutual.com. It's Jennifer.LegacyMutual.com, 713-579-3600. That's 713-579-3600. Thanks for coming in.
Absolutely.
Right.
Thanks for having me.
Cool.
Mike's off.
All right, so you're going to go with Patten on a pre-recorded next.
And with lots of communication on your home purchase, you've come to the right place. I'm Jennifer Hernandez.
Okay, and then it's going to be next gen.
Officer with Legacy Mutual
Okay, cool.
Mortgage.
All right, thanks.
Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.LegacyMutual.com or call 713-579-3611. Again, Jennifer.LegacyMutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
This is Business 1110.
Hey, welcome back. Welcome back. Right Path Real Estate Radio, 713-785-1817. Did a quick change during the break. Joined live in the studio with Mr. Ashley Patten. He's Patten Law Firm. Welcome to the show, man.
Hey, thanks for having me, Tom.
Yeah, how are you doing?
I'm doing good, doing good.
So y'all had a big event last Thursday.
We had a pre-rodeo barbecue cook-off.
Yeah.
We had about 470 people there.
That's a lot.
Yeah, we had a band. I think we raised about $15,000 for charity.
That's fantastic.
Yeah, so all the money we could buy off that party, we just give it to MD Anderson.
Yeah.
And because we have sponsors who pay for part of it, and I write a big check at the end of the night. But at the end of the day, it's worth it.
Yeah, absolutely. So you have your own law firm and you have your own title company, and so you've got plenty of spare time running both of those, right?
Yeah, exactly.
Not at all, right? In fact, let me see if I can fix this here.
Okay, perfect.
How's that?
Oh yeah, much better.
Yeah, okay, cool. All right. So walk me through you're a real estate attorney. But you don't get in the courtroom or anything like that. So
I take on about one case every blue moon.
Yeah.
When a Smurf is born, I take on a case, and so for the most part, I will represent our clients up to the point I have to write a demand letter or have to wear a suit and tie and show up in a court of law. So litigation is not my skill. What my skill is title work.
Okay. So what are some of the things that you see that are mistakes that investors make when it comes to title work?
Well, just investors assume too much.
Okay.
They forget to ask the questions that need to be asked.
Okay.
I mean, the questions is, how do you own the property?
Right.
It's amazing how someone says, well, I own the property because my brother and sister or my cousin is nowhere to be found and I'm managing it for them. That doesn't give you a defeasible title.
Right.
I mean, you have to ask the difficult
Now,
questions.
you just used a legal term, defeasible title, right?
Right.
What does that mean?
Basically, it means title that is unchallenged.
Okay.
And so it's a, fee simple is a, what people want to have, right?
Right.
And so when you say defeasible simple, if you don't have it, it means actually double opposite. So I should have said just fee simple title, but sometimes when you use the word defeasible title, it's almost it's a trade term of art rather.
Okay.
And just something that lawyers tend to end up using, which really make no sense.
Okay.
So it's but yeah, just ask the questions. Hey, do you own the property? How do you own the property?
Yeah.
Because adverse prescription or possession, it doesn't work. Part of the elements is you have to have open, notorious ownership to exclusion of everybody else.
Right.
So generally, if you're paying taxes on property, it doesn't apply to that total of time as far as to family, because families tend to work together.
Right.
And so if you have a brother or sister or a cousin paying taxes and live in the property,
right.
I mean, they're basically taking care of the property for the family.
Right.
And that's the way the court's going to see it as well.
Yeah, so you're not really going to be able to say that, hey, because I've been paying taxes for all these years, that I own the property all by myself, excluding those brothers and sisters, because you can say, well, the family, they weren't allowing you to adversely possess it. They were allowing you to versely possess it, right?
Right, on their behalf.
Yeah, on their behalf. So they were giving you permission. You weren't demanding it.
Right, you were a guest, not a squatter.
Right.
I mean, the big difference is if I move into your house, for instance, Tom, you don't give me possession, you don't give me permission.
Right.
I move into your house, I fence it off, I stake it, put a big flag on it saying it's mine.
Right.
Now I pay taxes.
Right.
After 10 years, you're SOL.
Right.
I own your property.
For 10 years.
Yeah.
Yeah. So it takes 10 years to establish that.
Right. And likewise, if you have a fence, it's amazing to me how many people would take a fence, and because they don't like their neighbors, they move their fence a foot away, or they create maybe a secondary fence.
Yeah.
All that space in between the land then becomes the neighbors.
Wow.
So when you survey your property out, if you find a fence a foot inside of your line, tear the fence down, move it back over a fence, over a foot, to where it's supposed to be, because otherwise you're giving your neighbor's property, and you might as well go ahead and deed the property over, because I see so many people who giving people property,
right,
yet they're still paying property tax on it.
Right.
So, I mean, if they already own the property, go ahead and give it away.
Okay.
Because that way you don't have to worry about paying property taxes.
All right, so if you want to call and ask any questions, 713-785-1817, or you can join us on the Book of Faces at Right Path Real Estate. Just go to Facebook.com, follow us on Right Path Real Estate. You can ask any kind of questions online. We'll answer them on the air. And if you want to go to Ashley Patten's website, it's plfpc.com. That's plfpc.com. Phone number is 713-621-5808, 713-621-5808. So we got in a situation, got called by a person that sold their property to an investor that was subject to, like 3 years ago.
Okay.
Investor takes on their payments. It's a house out in Baytown.
Okay.
and the family husband got transferred out to Odessa. So they're living in Odessa now. So this investor said, "Hey, what we're going to do is we're going to resell it on an owner finance wrap, right?" Explain kind of what they were doing, and then what they did is they said, "Look, we're going to help the person that buys it owner finance get their credit up, and in 2 or 3 years they'll be able to get their own mortgage. It'll take you out of your mortgage." Well, what happened in reality is they didn't really sell it owner finance; they just rented it to them. The family that was renting the property figured out that, hey, we didn't buy this owner finance, and none of this money that we were paying in rent is ever going towards us buying the house. So after about 3 years of renting the property, they moved out. So then now it's going vacant. Well, the payment's due on the 15th of the month. It's really due on the 1st, but it's late on the 15th.
Right.
Now this investor is making the payment on the 17th every month. So it keeps dinging their credit month after month after month that they have a late payment. Is there anything that the seller can do to stop all of this?
Well, there's 2 or 3 issues you bring in there. First, of course, is a wrap, an owner wrap, know, or a subject to. A subject to, by its definition, is I will buy the property subject to, in this case, the mortgage.
Right.
Owner financing, otherwise, I mean, it's just, hey, you make payments, you'll eventually have the property. Now, the problem with the seller is the seller lost control when they sold the house.
Right.
When they agreed to the subject to transaction, they're out of control.
Right.
So the seller can't do anything.
Right.
I mean, they are now. If the payments are due on the first, or if the payments due on the first, they're making payments on the 15th. Generally, that's a late fee.
Correct.
Which mortgages aren't like rent. So rent usually starts on $50 a day.
Right.
And then $15 per day.
Right.
Mortgage is usually 5% for the first time you miss a payment. Now, they shouldn't be hit late on the credit until they're 30 days out, though.
Right.
And so if they were paying the 17th, I mean, hopefully the investor's paying the late fee for them.
Hopefully.
Yeah, but if not, there's really nothing they can do.
Yeah, so what the seller wants to do is be able to resell the property again. I'm like, I'm not really sure that you can do that. And so I don't have enough information because in a situation like this, you've probably seen this before. The seller really doesn't know. They're not as savvy as what the investor was.
Right.
So they really don't know what they've done and how they can control it, all those kind of things. So what we did is I asked them to send me the paperwork that they signed, which they've done. They faxed that over yesterday. And now we're going to open up title to see what has the buyer actually papered in terms of with the county clerk's office.
Yeah, now, generally what we do now is whenever we do the owner financing documents, we will prepare 2 sets of documents.
Right.
Generally, in other words, you create a set of owner financing documents. I mean, it may only be 1 set, but you'll create a set of owner financing documents even if there's no money changing hands.
Right.
The reason for that is it allows the seller an opportunity to clear that mistake.
Right.
So in other words, if
they could foreclose in that situation.
Right. You leave an opportunity to seller to foreclose because most subject to deals are done just as that.
Right.
Subject to. But the way that we do it is we create a back for the seller to where in case the buyer is not doing their job and making their job. So they're not making payments, the seller has the ability to foreclose on the buyer because to me that's only fair.
Yeah, and it's possible that the buyer didn't even file the deed or any of those kind of things as well, correct?
Yeah, there's a possibility, but but quite frankly, if the buyer didn't buy the deed, it's not a transaction.
Right.
I mean, because Texas is what's known as a race notice state, so it's a race to the courthouse to provide notice to everything. So a warranty deed may be effective between the seller and the buyer, the grantor and grantee, but it's not effective towards the third parties into the public until it's recorded. And once recorded, everybody's deemed to be put on notice.
Right. Okay, so all that's great information. You're joined live in the studio with Ashley Patten. He's with Patten Law Firm. It's plfpc.com. That's plfpc.com, 713-621-5808, 713-621-5808. What I want to point out in all this conversation is when you're an investor out there and you're doing transactions, there are lots and lots of title companies out in the marketplace, but most of them, what they're doing is they're taking, mom and dad and 3 kids live in a, 3,000 square foot house in Cinco Ranch or in Greatwood or wherever, in Friendswood, wherever it is, and they're selling their house because they either want to downsize or upsize or whatever it is. They want to change addresses. And that's a relatively simple transaction. But when you start dealing with investor deals, there's a lot more things that you need to consider, and what you want to make sure that you're dealing with is a title company that has the experience, that has seen I doubt there's a situation that you haven't seen before. I mean, I know when I first got started with Fast Track, it was almost on a daily basis that I would walk in and go, wow, I've never seen that before. And then the more I did it, then it got to be like once a week I'd walk in and say, oh, wow, never seen that before. And then it went to like once a month, and then it went to like once every several months. And now I have to admit, it's been a really long time since I've walked into a house and said, wow, never seen that before. I'll never forget the first time I walked into a house. And I was there we were on a property bus tour with Alex Delatorre was on the bus tour, right? And Alex is like, hey, Tom, you gotta come here. I want to see the expression on your face when you see this. And I'm like, oh, God, what's it going to be, right? And I walk into the master bathroom, right? And right above the bathtub in the master bedroom, what do you see but the electrical panel box?
You're kidding me.
No.
Oh, my.
I can't, some of the stuff you can't make up, right? I mean, never in your wildest imagination would you say, yeah, that's a great place, so I can literally be standing in the bathtub, and if the lights go out in the living room, all my spouse has to do, hey, honey, can you trip that breaker? Yeah, it's right up, I mean, literally, so, yeah. And so now that I've seen that, I have to cross that off the list. And the next time I see it, I won't ever be able to say again. In that same house, this guy apparently had been in the granite laying business because he had a lot of leftover granite. So what he thought was a really good idea is he kind of broke it up into smaller chunks and he made this like mosaic floor in his master bedroom where you know how thick granite is, right? So the floor was kind of built up, and he basically laid all these granite chunks in this floor.
Wow.
And then just fill it up with white plaster. So it's plaster and granite chunks. And then you look up on the ceiling, if you've seen how tile layers trowel, right?
Yeah.
He had done that really nice trowel pattern on his ceiling.
Was it even presentable, or did it look good? Or it sounds ugly.
It was ugly as all
Okay,
get out.
good.
Yeah.
Okay, just making sure.
It was very ugly. And of course, every single room was a different tile.
Oh.
You've seen those before, right?
Yeah,
The entire house is tiled, but every single room is tiled. So I'm sure you're in that same. I bring all that up to say that you're probably in that situation. How long has it been since you've been able to utter the words, wow, never seen that before?
It's been a while.
Been a while.
It's been a while. I'm just trying to think if I can remember seeing it. I mean, now everything has a unique spin on it. I mean, that's kind of what makes my job still interesting. After doing it for 20 years, it's just it has a unique spin. But it's been a while since I've seen, hey, that's an alien or that's a Martian. It's just I mean, for the most part, it all falls down to big groups of lumps or whatever.
Right. The music tells me I'm out of time. I've been joined live in the studio with Ashley Patten. It's plfpc.com. That's P as in Papa, lfpc.com, 713-621-5808. Thanks for coming in, man.
Thanks for having me.
I'd shake your hand because you know why.
Yeah.
All right.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
Hey, welcome back. Right Path Real Estate Radio, 713-785-1817. Joined live in the studio with Michelle Imler. She is Next Gen Appraisals. 713-346-9911 is her number. Welcome to the show.
Thank you.
Yeah, so we always have to ask the question. You know where it's coming, right? Flooded houses versus non-flooded houses. Are you, on the investor side, are you still seeing a massive number of flooded houses, or is it like 50-50?
It slowed down. We were seeing a huge amount of flood houses at first where it felt like that we kind of refer to it as an assembly line, like how we operate. And it's almost like the assembly line was, okay, do flood properties.
Yeah.
And then we started seeing, quote unquote, regular houses. And we're like, what do we do? It's not flooded. What do we do? How do we appraise this? And,
right.
Which we did, obviously. It's a lot easier to appraise properties that have not flooded. But, yeah, it slowed down in terms of how many flood properties we're appraising right now.
Overall, your number of appraisals has not dropped, right?
No, correct.
So what are you
the
finding?
Percentage of what we're doing at one point was probably 95% flood properties.
Yeah.
Just all of them were flood properties.
Right, sure.
And then now we're probably seeing about 50-50.
Okay.
Which is still high compared to what it usually is.
Of course, yeah, because historically it's been like 99 to 1, right?
Yeah, and I mean, even after the tax day flood, we saw maybe 5 flood properties that we appraised.
Wow.
And now, I don't know how many exactly it is, but it's well above 5.
Yeah.
So.
Okay. And then you don't typically do many retail appraisals, correct? It's all investor appraisals, or do you do some retail as well?
We do some retail. I like to say our specialty is investment properties, and that's who we target and we gear towards.
Mainly private money lenders, hard money lenders, people like that, right?
Correct.
Okay.
We love doing those. Once you get used to doing those type of appraisals, they're actually a lot of fun and in some ways easier than maybe the retail conventional side. And the other great thing, not getting too far into like the regulations conventional lenders have to follow, but on the hard money side there's less, and so the appraiser is able to have a direct business relationship with those lenders.
Right.
And so if I go out and I'm busting my butt to get a property, appraised in say 24 hours, that credit is not being given to some third party that has to act as a police officer between the lender and the appraiser.
Right.
You know, the lender calls and is like, "Hey, thanks for getting this done for us."
Yeah,
kind of
absolutely.
thing.
Yeah,
So
it's
we're
a relationship business still. That's
correct.
not. Yeah.
That's not taken away from us. So we would, if not going too far into it, but with the relationships we go after and the clients we go after are the direct lender ones. That's the work we go for, and that's primarily hard money lenders, private money lenders, stuff like that.
Okay, so with that in mind, since you do primarily investor remodel or investor appraisals, what are some of the things that you see? Because you oftentimes, I'm sure, see the deal, you do the appraisal, and then you find out relatively quickly that the deal busts out. So what are some mistakes that you see investors are making? What are they missing? What are they like, oh, wow, if I'd have known that, if I'd have had the experience that you have as an appraiser, I probably would have even made an offer on this deal, or my offer would have been different.
Yeah, usually, so I guess what I should say first is that we don't know if a deal busts out or not. We give our number. Very rarely do they come back and say, hey, can you reconsider the value, stuff like that. And, of course, we will, but pretty much we do the appraisal and we're on to the next one. And then whatever the process is with the lender, buyer, seller at that point, we're not a part of. But if what I have heard later on, stories about deals falling out and things like that, is mostly tied into the rehab bid, I think.
Yeah.
I think another way of putting it is the numbers were too tight. Like
Yeah.
they didn't buy low enough, they didn't budget enough for this, and so everything basically had to go perfectly. And in whose world does everything go perfectly all the time?
Oh,
And
the world
so-
of construction, it always goes perfect.
Yeah, everything, appraisals too.
Yeah.
And so
we should have had Fast Track come on after you instead of before you, but anyway. Yeah.
I almost wanted to ask them if they wanted to do it together,
Yeah.
but because we were kind of talking before the show.
Right.
But yeah, I think the numbers being too tight is when deals start to fall apart, and that's when I hear about it. Is when they're like, "Well, can you give us a higher value? You know, we need $5,000 more to make the deal work or
Yeah.
whatever." And it's like, you know, the number is the number. I'm not.
Which is crazy. Why would you know, because what that tells me is that in the investor's mindset is, I want so badly to make this deal work.
Correct.
And the only thing that makes the deal work is the purchase price. So there is a value that the property's worth when it's fully fixed up. There is a number that the repairs are going to take, and we call it, when we teach in our weekend retreat, and our next one's coming up this month in March now, the third weekend of March. But we teach that so many investors are solving for the wrong X. The only X that you can solve for, you have to calculate what's the property worth when it's finished. You've got to be able to calculate what are the repair numbers. And based on those, then that will solve for what it is that you can offer.
Right.
But too many times, they find the repair number and they know what they can buy it at, so they're either trying to ask you to stretch what's the value. The marketplace determines the value. All you're doing is studying the marketplace on behalf of that investor.
Correct.
And when they want to argue with you on the value, because do they ever say, oh, you know, that's too high? What we want to do is we want
It's
to.
a funny story, but we don't have to talk about that one. But sometimes sometimes people have a different opinion of value than you, and that's just kind of the nature of what we do. But I usually kind of defer to this.
And they kind of want to argue with you, right?
They do. And
Which is crazy, because if they're arguing and they win and they're wrong and you're right,
and that has happened before, which
then,
is
then guess what? They
terrible.
lose money.
They do. I have it's a terrible experience I had where I appraised a property, and we'll make up numbers and say I appraised it at 500.
Yeah.
Well, he was hell-bent that this I'm so sorry.
Yeah, that's right. We can say that.
Okay, good. He was completely convinced that this home was worth 600.
Yeah.
Just completely
sure,
convinced.
right. And he was going to flip it? Or
No, it was a buy and hold deal.
yeah.
And so
a 600,000. Oh, multifamily.
I'm making up numbers.
Oh, yeah, I got it. Okay.
Yes, you know the story already.
Okay.
And so went out there and did it, and got a really kind of condescending email about, you know, how I was not giving a correct value, things like that. And so long story short, it ended up he got gap insurance, or not a gap insurance, gap loan to make the deal work, because I was not going to budge on my number.
Right.
And then other things happened later on down the road where he did lose money on the refinance side, because it was not.
Because
the numbers didn't play out the way that he had convinced himself and others had convinced him that they were.
Yeah, and if
gonna
he'd
play
listened
out.
to you in the beginning, you're
Yeah.
really on the investor's side. If the investors you're not the enemy. In
Yeah.
fact, you know, on the buy side, you want to be ultra conservative. On the sell side, push the numbers all you want, right? But when
Right.
you're in the deal, you better listen to the appraiser. I mean, I think that's a
To
huge.
me, really, I don't feel like an appraiser is on anybody's side. I really just feel like we tell you the facts, we tell you our opinions, because it's both of those in a report as facts and opinions. And then
well, but your opinion really carries more weight just based on the volume of deals you do, right? I mean, very few investors are going to do as many deals as you appraise.
Right, and that's kind of tying into what we were talking about earlier. Because we work with so many hard money and private money lenders, when we do come in and say, in this instance, the value was short on what they were expecting, they believe that. Like, they've seen so much of our work and what we do that there's that trust and that relationship that's built up over time, and not to mention, experience and everything else that comes into play.
Yeah, in fact, if you think about it, if you're a new investor or an investor that's done less than, let's say, 500 deals, right?
Mm-hmm.
And you're disagreeing with either the contractor or the appraiser or the hard money lender.
Yeah.
The odds are, when you look in the mirror, you're looking at the person that is wrong.
I feel like there's a difference between negotiating for a better deal and denial, and I think you have to.
Yeah, denial's not just a river in Egypt, right?
Something like that.
Yeah.
But yeah, you need to kind of, negotiate better, rates or whatever with your hard money lender. Try and get a better bid from your contractor. But at some point, the job is worth a certain amount, and the home is worth a certain amount. Like, this is a set in stone kind of thing.
Well, and that's the thing is there's an upper limit on what a home can be worth based on a particular neighborhood. I've described the story before. If a lottery winner moves mom's trailer out of the trailer park and builds $1 million home in the middle of the trailer park, that doesn't mean it's worth $1 million ever, ever, ever.
Right.
And so you take all those kind of things into consideration. So the market will dictate what's that limit, right? And why do we always want to try and be pushing for that? That's where risk gets added into the deal.
Correct. And if you're relying on that risk, then you're setting yourself up for failure. But I actually have a canned comment in my emails now talking about this, where someone will say, why didn't you rely on these comps, give it a higher value, blah, blah, blah. And I'm like, every market has a possibility and probability. My job is to find the probable value of what it's going to sell for. And that's when anytime there's a conversation about value and our value came in low, it usually is that conversation I'll have where, look, it's possible that you could sell it or refinance it or whatever your exit strategy is at the number you're thinking.
Right.
But it's more probable that it's going to happen at this trend line. So, it's all about bell curves.
I'm going to add that to a slide on the weekend. I like that part of our, because I teach a section in our weekend retreat that we call it, instead of ARV, which doesn't really take into all the things that really an investor should be looking at. We call it, I'm coining a term, it's a PFV, a predicted future value.
Right.
And because you're really taking, your specific house, not just the comps in the neighborhood, but what is unique about your particular house? Is it on the corner of a busy street? Does it face a busy street? Is it back up to commercial? There's some, every property has a uniqueness about it. And so is that going to improve the value, or is it just like all the other houses, or are there some things, is there a dangerous dog that lives next door? Which you would never see on a comp, right?
Yeah. I had a pit bull, actually, funny you reminded me, I had a pit bull chase me at a house one time. But really simplifying everything you just said and condensing it down at supply and demand.
Absolutely.
Right? And I think
it's part psychology and it's part economics, right?
And I think that so many people are like, okay, here's my 3 comps. This is what it's going to sell for. Let's do the deal. And it's like, okay, well, how many active listings are in that neighborhood right now? Who are you going to be competing with?
Oh, there's 80. What does that have to do with anything?
Right. And then there's also, okay, well, these are our most recent comps, but you used comps 12 months ago, and there's actually starting to show a slight decline in this neighborhood.
Right.
So you're already... So let's say that trend line is declining, and you're going 6 months out, it's declined even further, and you're using comps from now 18 months ago.
Right.
It's just, it gets scary sometimes, but usually, again, I have that conversation, probability over possibility, and then it kind of, like, the light bulb goes off.
All right, I'm joined live in the studio with Michelle Imler. She is Next Gen Appraisals. That's nextgenappraisals.com, NEXTGEN Appraisals. There's 2 P's in appraisals. So nextgenappraisals.com, 713-346-9911. That's 713-346-9911. So what do you think this summer's going to bring? Rising interest rates, is that going to have any effect on the valuations?
I don't know.
Yeah.
Because a lot of things, how about this? My gut tells me it's going to be a crazy summer.
Right.
Like, that's just my personal,
crazy meaning active, right?
Correct.
Yeah, sure.
But there's a lot of, I guess, indicators that maybe it's not going to be. And so if I say, okay, my gut's saying it's going to be busy, and then all these red flags say it's going to stay slow, then
I'd rather know what your head telling you.
I think it's probably, honestly, if I factor everything in and reconcile it, I think it's probably going to be just a normal
summer.
Just like a flat line normal, nothing crazy, nothing slow.
So on a typical summer, I mean, we turn about it's about 5 to 7% more volume on a summer month than the other months, which is not like it's, some people have the illusion that 90% of all the home sales happen in the summer months and only 10% takes place it's really pretty consistent month in and month out. It rises. There are busier months than others, but means that we should do somewhere between 7,000 and 8,000 houses a month, which is about our average. Could be 10 or 15% higher than that, which not a huge number when you look at it, but we might even hit 9,000 or 10,000 is what some people are saying. So
for a sale,
yeah,
number of active or number of close. I just don't know because one is
Hey,
the
Tom?
financial.
Yes.
I don't know economically.
All right, this is going to be a really short break.
Okay.
That segment was really long.
Yeah.
Houston because of the flooding.
How much time?
What kind of financial stability we're in.
Going into
on a
commercial,
consumer
30
level.
seconds.
And
The
other
break
thing, too,
is
that we're
2 minutes
seeing
and 30
increase in
seconds.
supply
Okay.
right now in certain markets, not all markets, but there are some. And usually, once a couple happen, then the rest follow. It's kind of a herding mentality almost. And so, I don't know. I mean, it's difficult to say in February what's going to happen in June, July, August.
Right. Well, the music tells me I'm out of time.
Oh.
Yeah, so you've been listening to Right Path Real Estate Radio. I've been joined live in the studio, nextgenappraisals.com, 713-346-9911.
Yay.
Hey, thanks for coming.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous
You're good. We're on a break right now. And then we're coming back in like 2 minutes or maybe a minute.
We'll see you
like
there.
4 seconds.
Oh, like 4 seconds. Sorry. Like 4 seconds.
This is Business 1110.
All right, hot mics.
I want to hear the guitar riff. All right, you cut me off. That's not good. Hey, you've been listening to Right Path Real Estate Radio, 713-785-1817. If you want to realize that you're 5 years or less away from retirement, then you need to get to our next event, which is going to be this Thursday at our offices. Go to rightpathrealestate.com. We have a live event. It's an intro to income and wealth in real estate. Come out, check us out. Jason and I, we bought, fixed, and flipped over 400 houses in the last 4.5 years right here in the Houston market. We're actually doing it. You want to learn how to do it. You want to learn how to make money in real estate exposure portfolio to real estate. More millionaires get that way. 8 out of every 10 millionaire gets there through real estate or has real estate in their portfolio. 2 best ways to get to know us and learn how to get started. First is our Intro to Income and Wealth. That's a free event. You can try talking us down on that, but you won't have much success. Go to rightpathrealestate.com. RSVP there. Next week, we're going to be discussing how to on mold houses. Buy, fix, and sell mold houses. Give us a call. Send us an email. Go to rightpathrealestate.com. We look forward to seeing you at our next live event on Thursday. Thanks for listening, guys.
All right, Tom, have a good one.
Thanks, you too. All right. Hey, if you need me to, while you're having that conversation on with Titan, in fact, let me